Hello, and welcome to Crisil Ratings Podcast. I am Aditya Jhaver, Director Large Corporate Ratings. In today's podcast, I would like to share the credit outlook for the fast-moving consumer goods, that is FMCG sector. Revenues for FMCG sector is expected to grow by 7 to 9% this fiscal, as against the 8.5% growth in fiscal 22, primarily driven by price hikes undertaken by players to counter surging input cost. Volume growth, however, will remain low at around 1 to 2% compared with 2.5% in fiscal 22, weighed down by sluggish rural demand and consumer preference shifting to smaller pack sizes. Next fiscal 2, the sector should see almost similar pace of growth but driven by better volumes. This is because rural demand is expected to recover with inflation gradually moderating and government implementing measures to increase the rural income level. Urban demand will continue to remain steady, supporting the overall growth. If we break down this into various subsegments, the food and beverage segment, which constitute around half of sector's revenue, will grow 8 to 10% this fiscal, given the essential nature. On the other hand, consumption of personal care and home care segments, which account for the balance, will grow 6 to 8%, with consumer being discreet and also resorting to downtrading owing to higher prices. On the profitability front, despite price hikes undertaken by FMCG players over the last 4 to 5 quarters, operating margin will moderate by 100 to 150 basis points to around 18 to 19% this fiscal on higher input cost of key commodities and rising selling and marketing expenses. Next fiscal, the operating margin should improve by 50 to 70 basis points considering better volume-driven growth and coverage of cost, almost reaching pre-pandemic levels of 20%. Credit profiles of FMCG players are seen stable, supported by healthy cash accruals, strong balance sheets, with continuing low dependency on debt and sizable liquid surplus. With this, we come to an end to the podcast. Thank you for listening in and stay safe.